That's it for timing the market. Now let's see how we use that information. Situational investing. Situational investing is recognizing what the market is doing and implementing strategies that are consistent with that behavior. Let's move on. The market's trend. How do you determine the market's trend? You consult the color guard, and that's just a matter of opening up the service, and you see the color guard right on the home page. Now, I didn't mention it, but on that home page, we have documented a short strategy statement, and we usually address three types of investing. We address prudent investors, aggressive investors and traders, and those of you who are riding the wave. I mean, trying to buy long in the upturn and sell short on the downturn. You can read that, or you can go into the views and read it in more detail. Study the market timing graph. You can look at some of the things that I just talked about. And of course, you can note the recommended strategy. Let's move on. Common strategies. You can buy and hold stocks in all markets, buy top stocks in up markets, sell weak stocks in down markets, buy top stocks in up markets and sell weak stocks short and down markets. Item 4 is riding the wave, where you buy on the way up and sell short on the way down. Let's look at some of these. Buy and hold. Boy, there's a lot of people that believe very strongly in buy and hold. And if you're in a long bull market like we have been for the last 4 years, it's not a bad strategy. If we went in and bought the top 20 stocks on March 21st, 03, that's a confirmed upturn, and held it until 8/16, we would have 107.52% total return. And Mark, let's see how we might get that number. Let's go into Pro Graphics, and let's go ahead into the stock viewer, and let's go back to March 21st, 2003. And we use quick test. Use 20 stocks. Now, what are the chances of this portfolio going up? 99.46%, right? Well, he's got 119.79%. Of course, I only took it to the 16th, which was that was the very bottom of this latest downturn. Even if you went to the very bottom of the downturn, you're at 107%. Okay? That's the easy way. If you're dealing with high VST stocks in an up market, that's a very nice strategy. Let's go to the next PowerPoint, Mark. Buy top stocks in up markets, buy top 20 stocks and confirmed ups, and sell all on confirmed downs. And this is a strategy that we advocate. Okay? This gave it 220.98% total gain, and 30% compounded isn't bad. Mark, let's go into VectorVest, and let's take a look at that. Go into portfolios. Click on how to master the market here. And let's look top 20 point to point. I took this one to 726 because we were to sell on confirmed downturn. And I haven't sold these stocks yet because I wanted to see what we had. The thing I like to do is, Mark, take us to look at the equity curve. Take this off. There. And what we can see here is I bought on March 21st, and then in March of 2004, I sold all the stocks, and you can see there's this flat line here while we had the downturn, okay? And then, actually, I sold here, and I had a flat line. And actually, I lost money. I lost a little bit of money in that next wave, and I lost money again. And I was about to lose faith in the system when I did it again. Oh, and I made some nice money. And then I did it again, and I made some more money. I did it again, I made some more money. I did it again, and I made some more money. And this is what we advocate, is you buy long in the upturn. If you get a downturn, you either want to go into cash or you want to buy puts or something to protect your portfolio, okay? And we're very pleased that on July the 20th, we did, in our strategy, of the week, we did present ways to protect profits because we were anticipating that downturn. But this is what we like to see. 220% in 4 years or so isn't bad. Yes, I bought the top 20 stocks. I made this as simple as I possibly could. I bought the top 20 stocks ranked by VST Vector. And let me show you that search. I should have done that. Mark, click on Buy from Search. And the search is nothing more than you go price greater than 0. When you look for price greater than 0, you get all the stocks in the database, and then they're ranked by VST Vector. So you see exactly what you would see as the top 20 stocks in Stock Viewer. Yes, ma'am. The question is there an optimal number of stocks to buy, 10 versus 20? That depends on how much money you have tied up in your portfolio. If generally speaking, you're playing with $100,000 or so, 20 stocks is fine. 10 stocks is okay, but I would say 20 stocks, okay? You got $5,000 in each stock, and if you lose one stock, it goes to 0, you lost 5% of your portfolio. If you have $5 million you're playing with, I would say you want to start looking at 50 stocks. You got to get more diversification. The thing is, and if you get more stocks in your portfolio, you want to look at the better stocks, the ones you don't have to trade so often. Because if you're trading stocks every day with a 50 stock portfolio, those commissions are going to start eating you up, even if they don't seem to be very high. Let's go on, Mark. Okay, so we bought and hold, and we bought long, and we sold on the confirmed downturns, went into cash. Let's go on the next one. This is the detail on that strategy, okay? Those are the numbers on each wave. Let's go on. Sell weak stocks in down markets. There's a real lesson here. I sold the 10 worst stocks greater than $10 short on the confirmed downs, and I use a 10% trailing stop to cover. Okay, that means I got out of the position, and I covered all the stocks on a C up, and I made a total gain of 3.91% in this 4-year period, and a compounded rate of return was 0.86%. And my conclusion from all of this is it's not recommended in a bull market. Not recommended when interest rates are low. If interest rates are going down, you don't want to sell short. If interest rates are going up, and you're in a bear market, boy, you can make a lot of money fast. Let's look at the detail on it, Mark. I could show you the graph of it, but I don't want to spoil your lunch. You're lucky if you make money on any of these waves. I did a couple of times, but it's not worth the effort, okay? Let's go to the next slide. Riding the wave, buy stocks long and up waves, sell stocks short and down waves. If I don't like this, then I can't recommend this. Now, we use the so-called riding the wave in the model portfolio, but I tell you, we watch that portfolio like a hawk. But we use a 5% stop to get out. We use a very tight stop. And another technique we use, if we're long and we start getting stopped out, we sense the market, and if we think the market is starting to get toppy, we do not replace the stocks. We just let the portfolio squeeze itself down. We keep the winners, sell the losers. It was amazing on this downturn. We went short, and some of the stocks bounced up, so we got rid of them, and we hung on to a couple. And the market bounced up, our stocks went down. And I got a couple of emails on it. What are you doing in this market, Anyway, we managed to make some good money on this downturn. But I don't recommend it. It requires too much time, and you really got to know what you're doing. I got a couple of minutes for questions. Yes, sir. All right. Mark, you want to show the model portfolio? All right. This is it so far this year. And you can see that during this down wave here, we made some money. Okay. And then we went long a couple of days ago. But what we do is, say we go long, and we have a 5% stop below the price. Once it hits that stop, it's out. okay? And as I said, we'll sense whether we're going to replace that stock or not, okay? Then, as the market continues, we think the market's getting weak, we won't replace them. But if we have a stock, say, that goes up 15, 20%, I'll put a 50%. I'll only lose half that profit, okay? If it's not up, say, 15 or 20%, say it's up 6, 7, 8%, I think the market's getting weak, and that stock goes down 5% in one day, out it goes. In other words, you got to pull the trigger fast on them. There's really not that many trades because lots of times we just stop replacing the stocks and we're just letting the ones that are going up, we get rid of the ones that are going down.